Hey, what's going on, everybody? I hope you're having a great week. Jason Jenkins, Jenkins Risk Management. I'm doing we're going to update what we did today. This week's been a little bit slow as regards to the energy or just the momentum as far as intraday and what we've been doing relative to the latter part of last week. But um, obviously, the vol that we've had in March, we were looking at the average true range in the Nasdaq was around 500 points a day, and now we're trading back to 20 points, which is actually a lot when you're at VIX 10, 11, 12, 13. But we can talk a little bit about kind of the vol structure. I want to just hit again on what we did today, recap, and then what we think big picture. It's been about a week since I did an update on what I had called the last bounce in the last public video I did last week. So I still think we're in the midst of that playing out. We're actually, it seems like we're pricing in equities more to perfection than we did even in January before all this happened and all the destruction that's been done to the economy. So it's kind of goofy, but obviously this is how things trade, and it's never one thing that's driving it, and trying to trade both sides. So we'll talk about that. And I also still have, some of you are asking about that economic crisis package I did. So it's every course we've done, my Forex options, intro to options, Pi cycle trading course, the full 9-hour directional model that was formed from our proprietary trading on the institutional side, and the options team and the prop program. I'm going to touch on that, but it's all still at this crazy discounted price. So you get everything at the lowest price we've ever done. So let's get into it. Let me minimize this. And so in S&Ps, it just came in and we're still in an uptrend. And it's another day where you're doing nothing but making higher lows on the 15-minute and 30-minute. As far as how we determine or define the trend, what we call the TMS, the technical market structure, is just higher lows or higher highs or vice versa relative to each other. That will really define your trend. It's not about moving average crosses. It's not about, CNBC saying something's down 25% and now it's a bear market. You can have price gains or little price gains that will, that's just not the way to define a trend. So we'll come in today and pretty much straight up since last night. So didn't really overcomplicate it. Been playing S&Ps on the long side from a core perspective, meaning longer term and swing trades, versus our bearish bets that we've been slowly fading the Russell, and we started shorting the Nasdaq just 2 days ago. So I've been very patient in this rally, and now our model is going back to the short side, even on tech. And so I'm pretty happy with the location on that. But also then intraday is a different story, different time frame, multiple durations. So, but the day trade move was up in equities also. So it's just literally, we bought here in the morning. This is pretty much right on the open. Sold, bought the pullback, sold. Sold a couple more pieces, made a new high. I always like to take in new highs. Bought this pullback on the 5-minute cycle, sold again. And then this has been a pattern, especially in bear markets, where you tend to rally in the morning and then you sell off in the afternoon. It's been very indicative of how the market's traded. It happened again here today. Did the same thing yesterday, was doing that last week. But that's not just saying, oh, it's lunchtime, get out. It's more of a keeping an eye on the 30-minute hourly cycle, 15-minute cycle. When those kind of all start to roll together, then I'm not really interested in buying the dip. And I'm much more patient. You can see I sold here my sales are up at 90 and a quarter, and then I didn't buy here. I'm waiting to much lower. Now I also sold the Nasdaq, and I have a core short. So when I intraday, I sold the Nasdaq on the bounce. I actually missed selling on this first bounce to a lower high this morning. That would have worked out well. Did sell this bounce that ended up going against me, and so that's why I was working more the long side in S&Ps. And then I cut the risk when I'm kind of hanging out here near the high. And once we made the new high, I thought maybe I'm probably going to stop on the high up here. I just didn't want to have the amount of risk I had on, in addition to the futures that I'm already core short. So I just kicked that out. So it's equivalent of being long 3, 4, 5 S&P contracts here, making money, taking profit there, and then dragging just a one lot on the Nasdaq. You take your loss intraday on that. No biggie. Then the Russell wasn't really active in that. Most of the trading was just S&Ps. It's actually slower than yesterday. I was hoping today we'd maybe get some more vol. I sold a lot here, and I probably could have just covered it or scratched it close to scratch. But I'm back long some S&Ps, so I'm just going to leave this Russell as it is. Yesterday we signaled we've liked gold on the long side. We have for 18 months, the same as treasuries. They trade very similar now, especially with 10-year yields getting close to zero. I mean, gold's basically kind of trades like a zero coupon bond. I mean, you obviously have some different interest rate or sovereign risk with treasuries, but at the same time, you have different liquidity. You know, treasuries are much deeper than gold. Gold's a much smaller market, but they've been trading pretty much in lockstep. So we're bullish on both. We were buying actually the minis yesterday. We lightened up on some of that today. We had a good rally, and then even 10s actually rallied. 10s are on fire today, so we signaled the buy in our real-time alerts and our membership room at 14 plus, and then I took profit on some of that, and I covered. So we have, you can do different things with the options, but we had call spread on 10s, like I'm long 139 strike. Maybe I sold on the up 140 strikes. But anyway, when we pulled back, within this pullback here, I covered my short calls, which were making money on yesterday, which gets me naturally more long. In addition to buying futures, today we rally. I'm still holding the calls just outright. So those did great. And then came out of my futures on some. So I'm still core long. I'm just going to keep trading this on the long side. I think the bond market's starting to figure out that it's kind of a philosophical question about real rates when you have CPI going negative, but you do have real rates rising. And so the market's looking at, well, Treasury is going to have to go pretty close to zero, if not starting to think about NERP. Not saying that I necessarily agree with that, but it does seem like the markets, I mean, if you're following the global PMIs, I mean, the bond market has this right, and then now it looks like we're about ready to make this final push, and treasuries are trying to break out. And once again, equities, there's a huge dislocation between the economic reality and what is the U.S. stock market. So we know how that ended up in February and March. That's been our call that we're going to see the similar play out again. What else do I want to hit on? 10s, gold. Still a little bit short oil. I want to give away all our positioning for free here. But today I thought was a good day to buy some out of the money puts. You're back to the top of the range. We got some resistance here. We've had a nice rally. The daily cycle's all high. So we've been slowly fading this. It's the same global macro trade, really. It's just kind of patiently fading. Fading the risk assets. So is what it is. That's that. I haven't really gotten aggressive on the downside. We still need to break the intermediate term I think Forex, kind of a quiet day. I did cover some euros. That's a little bit oversold intermediate term. We've liked kind of taking a few dollar hedges on the short side. So I sold dollar Swissy yesterday. That's kind of moving in our favor. Did like dollar CAD long term. And we're very much dollar bulls. We have been for a long time. But we were taking profits yesterday and this morning. You got a daily cycle that's high again. So there's some room to pull back. There's maybe some room for the euro to bounce. That's pretty much it, guys. So I think there's some serious opportunity here for another move back down in equities. There's a lot of risk, and you're starting to see the bond market already kind of price it in. We've made a ton of money in the first quarter in the sell-off when everybody missed it, and we were starting to. I mean, we did several videos on the coming recession, and then talking about a high with the business cycle in January. That was just spot on with the major turning point on the cycle. And now I'm saying the same thing. This is a bounce that you want to sell. And how we're going to play it, I think, is a great opportunity for people to join the team. And the package that I put together, it's everything. So under our memberships, the Cycle Edge memberships, it's only $1 right now. You can sign up and basically try out that service and be a part of our group for the next 30 days. But that's $250 a year. Now, I used to have a separate options program. You get the options course, which is my favorite strategies. I cover some of the intros of the options if you're new, and then I get into even like deeper spreads and like ratio back spreads that we use. And then I combine the model, so you learn the whole model in that. So that used to be $3,500. The prop team is a mixture of, we set up a day trading group and kind of teaching people to trade futures and Forex. You can trade whatever you want, but I mean, if you really want to day trade, the futures is the way to go. You're going to get more margin, more liquidity. You're not stuck trying to just trade the US trading hours and having to deal with shares. So there's lots of reasons to want to do that. So that's kind of our prop group, trading for income. I mean, I'm in there talking about swing trades and longer term global macro big picture stuff, but then we're taking real risks together in real time. So that's a great environment to learn. It's a great environment. It's one thing to read a book. It's one thing to take one of our courses, but that's where I do all my coaching and mentorship now. I used to have a program that was $3,500, basically 8-week session, a couple times a week. And we work in a group setting. We work on the things like size and the psychology of trading and your trading plan and how to structure your portfolio and how to flip and what to do in this situation and how do you know when to add and how do you know when to go contrarian, all that stuff. We work together. That's where you're really going to grow. And a big part of trading and getting consistent, which most traders aren't consistent, most traders can't trade for a living. I mean, I've been trading directionally for 15 years now and been free for the last 8. So trade when I want, where I want, make all my money from the markets. I don't have to, I haven't taken a paycheck. It's all taking risk directionally. And not a lot of people can do that. But it's through all the pain and not quitting that I kind of came to learn how to do what we do. And plus the experience I had in the fixed income markets and covering the primary dealers and all that shit. So the big thing though is working on the habits. So there's good trading habits, bad trading habits. There's the right actions and the wrong actions. And most people don't know what they're doing wrong, first of all. You got to become aware of what you're doing right and what you're doing wrong. And then you got to actually have a process of kind of organizing that and breaking it down to, well, I have these 2 or 3 things that I kind of consistently do that's messing me up. All right. You isolate it and you work at eliminating those habits. And then the consistency actually naturally will come from getting rid of the weeds. So that was our top program. And because some of you, as a professional trader, you don't trade just your own money. Okay, you trade other people's money. You get leverage. You put up money. A firm puts up money. There's better ways and smarter ways to do it. So I partnered with a firm out of Chicago that seems to be able to do this globally. They're doing the best job. Um, and I'm traveling. I'm in Tennessee, heading up to Chicago, trying to be there before the city reopens. But anyhow, these guys have funded 497 new traders in April, 240 grand of withdrawals. So they're processing a lot of independent traders globally. Um, so I have, so you can sit down and do a program like that instead of putting all your money into a trading account, struggling, losing a bunch of money, then coming to me to get educated. Do it the opposite way. Don't blow your account up and then try to figure out a process or supplement your process. Save your money, use another firm's capital, get the education, get together on a team so that you're making money right at the beginning. And so we help you walk. You can trade your own capital too, or do both, but I walk you through, help you get funded with these guys. They have certain levels you need to hit and criteria, and you got to prove that you're managing a certain amount of risk correctly. Um, but I mean, this is some of the results that we've had. I've got guys going through some of the levels within 5 days. So it's all possible. It's just kind of sticking to the process. But guys put up, oops, sorry, this is really sensitive. Putting up big numbers. I mean, for just to consistently do $1,000 a day that's life changing. And you can do that, and you can consistently do that. You'll have a skill set that you'll have for the rest of your life, and you can trade anywhere, anytime you have an internet connection, when you want. Just an amazing amount of freedom. But we have guys then now, you get consistent doing 1,000. There's really not much you change other than some zeros on the size to start doing 2 grand, 5 grand. Um, you know, here's a 2,800, 1950 on Nasdaq, S&Ps. So we're just in here every day. Sorry, that the wheel's going crazy. Just grinding away on this stuff. But I wouldn't wait. I wouldn't wait. Here's the equity curve I pulled up. One of the guys, and like this is what I did. This was one of my days on Friday last week, and the big down day was set up pretty good. So we don't trade pie sizes. This is learning a real process, taking real risk, and then doing it in a professional manner where you can put up big numbers. So that's what we're doing as a team. I don't spend a lot of time like proving this stuff. It's just, anybody that follows us long enough, you get that our model is about time. It's a cyclical edge for the most part, and then you got to learn to work your size around these edges. We have good edges as far as the technical trend perspective, then we have even better edges when you combine that with the cyclical process and components. And like this is our Forex account, just plugging in the model on a couple different time frames and executing the same way on that front. So you get everything, guys. I get all the courses. Should really just be going through this stuff in a webinar. And there's my Forex course, Pi cycle trading secrets, the directional model. I mean, I get into like the physics of our model, wave formation, vibration, the origins of the model, fractals. Everything's energy. So there's we're all the same concepts and components and physics and the secret behind the universe and sacred geometry. All that stuff is constrained in certain dimensions, time being one of them. So it has cyclical components along with waveform vibration energy that goes through markets, just like you find in gravity waves. So comprehend, I go into all that stuff in that particular course. So if that resonates with you, and again, I mean, we crushed it in the end of last week. We had a huge first quarter when most people absolutely, the street got murdered. And it's not funny. I mean, we're going into times here where we're literally discussing, are we in depression or prolonged recession? And if you, I mean, I traded '08, front row seat to the end of the world, talking to the heads of his desks on the treasury desk. And it's part of why I started the firm, is not wanting to see it. When I started at Schwab, seeing people lose half their account with their retirement because they're long Google bad advice or no advice from people on how to trade, or see a recession coming. And these things don't last 1 month. But there's a huge amount of opportunity. So you come here, click here, get access. You can always email me if you come into the chat room. That's the top of the website. Get a hold of me that way. But it's everything, guys. About $15,000 in value between all the courses, the options program, the prop team, the coaching and mentorship. You get all that. So you basically trading with me for a year. And this is a skill that, you're investing in yourself. It's something you always have. So $2,500, that's not going to be around forever. I got a new marketing team, and we got a whole new marketing plan coming in soon. So the price points are going to go up. I'll tell you that. That's for sure. But this is just a great time. I want you to be there, be able to capitalize on this next down leg. And usually the second leg is the greater leg. You have the first move, you have a reactionary bounce. The second leg is usually the bigger leg. That's true long term if we're talking about coming off the cycle highs. But I teach my guys the same thing in day trading. You get the first change in trend, you get the first initial move, it's the second move that's usually the larger one. So timing couldn't be better. And hopefully I'll have some of you on the team. And yeah, that's all I got. Enjoy the rest of your trading week. And I'll talk to some of you guys here on the chat on the Asia Open.